Hi everyone, you've tuned into Money Control. I'm Karunya Rao and with me is Ravi Krishnan, and today the MPC meet has begun. It's a two-day meet. The outcome will be there for all of us to watch on Friday. But first, let's talk about the backdrop that we're working against, the backdrop that MPC is working against. Tell us how the macros are playing out and what will be the key focal areas, what are likely to be the key focal areas this time?
Well, obviously, times are greatly uncertain. Especially with the Russia-Ukraine war still going on. Even if the war were to stop today or tomorrow, nothing is really going to change. The uncertainty is still going to continue.
Yeah.
We are facing, real supply-side pressures that is not only going to stoke inflation, but it is also going to hurt growth. So it is in this context, that the MPC has a really tough task of deciding the future course of monetary policy.
And we're calling it one of the most critical MPC meetings since March 2020. Why is that? Is it because of the ongoing conflict that's playing out? There's commodity escalation in prices across the board. So tell us, why is it so important this time? And what is it that RBI is likely to do?
Well, it is important because we've had 2 years of easy monetary policy, which was supposed to give a push to growth, but the growth recovery is still very nascent. At the same time, we are facing stagflation risks because inflation is also rising. So it's really a high wire act for the RBI to figure out what is a way forward. At the same time, it also has to support, at least that is the stated aim, is the orderly evolution of the yield curve, which in other words is simply about, about helping the government borrow smoothly from the market.
Yeah.
So when you put all these things together, and when you also look at the global situation, where big central banks, like the US Fed or the Bank of England, when they are all hiking rates, then there is also the question whether the RBI is behind the curve or not. So all this makes it for a very tough and difficult situation. But having said that, I think it is unlikely that the RBI is going to do anything at all.
Okay. Once again.
Yes. Forget about a rate hike. I don't think it is even going to change its stance to neutral this time from accommodative.
But last time, of course, it came in as a pleasant surprise for many people on the street that it was a status quo. The context was completely different. There's too much has changed in 2 months. But right now, if we, let's say, retain status quo on all the counts, on all the fronts, whether it's the stance or the rate, what happens? How will markets digest it?
See, I'm not clear. I'm not really sure about how the markets themselves are going to digest it. They'll probably welcome it,
okay.
I would think, right? See, we'll have to look at it from the context of growth. Growth recovery is still nascent, as I said. Private consumption is still just a little bit higher about what we saw during the pre-pandemic years. Remember that the pre-pandemic years, if you look at 2018-19, growth was not great. It was nothing to speak
we were
right
already
home
seeing
about.
A downtick.
Growth had already fallen. Consumer sentiment, if you look at the CMI, consumer sentiment index, consumer sentiment is still down in the dumps. The last reading is, the index reading was some 35% lower than in February 2020. So when you look at this, the RBI will not want to, kill this growth recovery. And also the last 2 months, if I remember correctly, the governor, Deputy Governor Michael Patra and external member Ashima Goel, they all have talked about the necessity not to compress or kill demand. So the RBI will approach it from this point of view. The MPC will approach it from this point of view. And also remember what is causing inflation. It is mainly what we are seeing in terms of commodity prices rising. So oil prices, crude oil has risen some by a fifth since the last MPC meet. Slowly now we are seeing petrol and diesel pump prices are also rising. They are up about 7% or something like that. But it's supply side pressures. If the RBI increases rates, it could well argue that nothing is going to happen. Most likely what we'll see, like we have seen in a couple of previous instances also, the MPC, it will make an appeal to the government to say cut excise duty or do something like that to provide relief to the common people in terms of, and also keeping a lid on inflation. So while RBI will definitely increase its inflation expectations for FY23, which was pretty low to begin with, it could still be within the comfort limit. Well, not the comfort limit, within the mandated 2 to 6% inflation band, which it is supposed to target.
But what is the figure that the street is thinking or has in mind this time for RBI inflation projections overall?
From what I did, the people I spoke to, people are expecting around 5.9%, for FY23 inflation.
Okay. I asked you this last time also before the MPC meet. If let's say there's no change, which is most likely this time around as well, what happens to the rate hike cycle? Because everybody at the start of this year had a completely different tone, had a completely different plan, central banks across the world. And now because of these unprecedented circumstances, everybody is kind of taking it easy, taking it slow. So what happens in the next few cycles?
Well, in the next few meetings, you mean? Well, see, eventually they will have to, change the stance to neutral, and from there on they will hike rates. But there are a couple of factors, they will have to look at. If, for example, they switch the stance to neutral, they will find it very difficult to accommodate the government borrowing. See, the government plans to borrow around 8.5 trillion rupees in the first half of this fiscal year. According to its borrowing calendar, rates are already going up. But at the same time, remember that RBI is also tightening by stealth, what we have seen through variable reverse repo options, etc. So all it will do, to answer your original question, is that it will push back the rate increase cycle a little bit.
Okay, so 5.9% is the inflation projection that Ravi and the experts he spoke to are looking at. But apart from that, from the fine print, what else will you be keenly watching out for this time?
The most important thing would be, I think the inflation and growth estimates, and also the tone of, the MPC statement in terms of the guidance they will give for the next few meetings.
All right, let's see how it plays out. Of course, on Friday, we'll get you a comprehensive coverage on RBI's commentary, RBI's final decision for rate hike and for their stance, and much more. So stay tuned for that on Friday. But for now, it's a wrap from us. Thank you for watching.